Hi everyone, today let's talk about pricing power, as well as new highs for the amount of Americans that are owning stocks. Then we'll look at our normal indicators, calendars, and the charts. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So companies are losing their pricing power, talking about FedEx to the airlines, and they mentioned Target, General Mills. We also saw this with Nike. I covered FedEx and Nike specifically, but we're really seeing this across the board. People are just not willing to pay higher prices for these services. And if these major companies are not able to continue to raise prices and actually demonstrate that pricing power, then we should expect weaker earnings as we go into 2024. And you can see here they actually mentioned Nike specifically. They are planning to cut costs by $2 billion over the next 3 years. And then you got toy makers like Hasbro laying off 1,100 employees as they are continuing to demonstrate lackluster sales. And the companies that are doing well are the ones that are controlling their costs and maintaining their pricing power. And the analysts here mentioned that good companies don't have pricing power like they did in the pandemic. During the pandemic, even in 2021, you can see strong correlation with earnings and revenue. And now as we get back into a more normalized economy, 2023, much weaker earnings, much weaker revenue. And that seems like it's going to continue here in 2024, although the prediction is quite strong at 6.6% and 4.4%. The question is, will these companies deliver on these kinds of predictions? And if they don't, that could be a marked turning point for markets, especially with earnings coming up in about 3 weeks from now. And finishing up this article, they do mention this is not affecting all companies quite yet. MasterCard still seeing record holiday sales. They benefit from that across the board. Restaurant spending continuing to go up at 7.8%. Consumer spending on grocery rose 2.4% and 2.1%. So everything good there with apparel and grocery. And even with vehicles here, we can see new vehicle costs climbed from less than $38,000 to more than $50,000 in 2023, which is a massive climb of 32%. And now we're starting to see those numbers come back down as part of the pricing power, like I mentioned, and also the spending hangover as we see credit card debt hitting over $1.08 trillion, which is a record high for consumer debt. Overall, I do think there is risk for Q1 of 2024. And if we can't hit these numbers for earnings and we can't maintain these margins for companies in the S&P 500, we could absolutely see a turning point, especially with the strong rally that we've seen over the last 2 months. Shifting gears, I do want to mention that more Americans are now owning stocks than ever before, and that is big for the economy. And you can see that here we're up around that 60% number of households owning stocks, which is a very high number. So just a couple of decades ago, we were in that 30 to 35% range, and that has more than doubled over the last 3 decades. And you can see it here mentioned, almost 60% own it either directly or through their 401k plans. And this does contribute to the wealth effect, people feeling richer, especially with stocks having a very strong year, which does tend to drive spending in the normal economy, which could stem some of the risks that I mentioned in the previous article. Moving over to market factors, starting off with fear and greed, we continue to be in extreme greed. Looking at this timeline, you can see in this 80 range is where we typically see markets turn, and that is where we hit most recently on December 26th. We hit that 80 mark. We also hit it on December 15th, and now we are rolling over once again. And you can see here from June and July, we can hang out in this range for a while. We hit 81 here on June 16th, and then we hit it again here on July 24th. And then we eventually started to roll over back into that more normalized range before eventually hitting extreme fear in October of 23 and then rallying to current prices. So interesting to see that. Definitely in an area where risk is to the downside, but understand that we can stay in this range for a couple of months, and we just got here around that mid-December timeframe. Otherwise, looking at market momentum, still extreme greed, stock price strength, extreme greed really across the board until we get down to market volatility, which is still in neutral, safe haven demand still neutral, junk bond demand back into greed, so almost all of the indicators are in greed or extreme greed. Again, as a contrarian metric, does put the risk to the downside. Similarly, here on the AAII survey, you can see we hit a 1-year high on the week ending on the 20th, and now we are back down into this 46.3% range, which is a little bit more normal, closer to that historical average, but still not very close. Neutral and bears are much below the historical averages. Again, contrarian metric saying that the risk is to the downside, but that doesn't mean that markets can't go higher, at least in the short term. Moving over to seasonality, we are moving into an election year, which is typically rough for markets. And you can see January in election years can be all over the map. We got the NASDAQ leading at about a 1.5% gain estimated, Russell sitting between 0.5% and 1%, and then we got the S&Ps, the Dow, as well as the Russell 100 basically flat estimated. So definitely interesting to see. It's also worth mentioning that the NASDAQ does outperform on election years, whereas everything else is a little bit weaker generally. So this will be interesting to see how January plays out. Typically pretty flat early, see a dip in the mid-range. But on those election years, you can see we kind of dip early in the month, first week or 2 weeks of trading, and then we hit those lows and rally into that mid-range, and then we're kind of flat here in the end of the month. So keep that in mind as we move into the January season. Moving over to the economic calendar, remember Monday is a holiday, so no trading. Looking at Tuesday, we do have global U.S. manufacturing PMI at 945. That's below the 50 mark, so expected to be weak there. Similarly, we have ISM manufacturing PMI and ISM manufacturing prices on Wednesday at 10 o'clock. Both of those are expected to be pretty weak. And then you get the JOLTS report at 10 o'clock, FOMC minutes at 1400. Those are obviously going to be very impactful. And then looking at Thursday, we do have initial jobless claims, global services PMI at 945. And I always like to watch the Fed balance sheet change for the end of the session on Thursday. And ADP non-farm employment change will give us a little bit of a precursor to the actual non-farm payrolls on Friday. So Friday we have CPI for the Eurozone, non-farm payrolls like I mentioned, the participation rate, as well as the actual unemployment rate at 8:30. All of those are going to be very important. You also have ISM non-manufacturing PMI and non-manufacturing prices at 10 o'clock. So lots and lots of data coming out this week for the first trading week of the new year. Moving over to Max Payne, look at these numbers here. So not a ton of options, but put call ratio 0.8. I have not seen a put call ratio on this indicator for a very, very long time at these levels. We've been seeing put call ratios up in the 2s, saw some 3 numbers, but now we're seeing it at 0.8, and you can see these massive call walls, 476, 480, 483. Everyone seems to be bullish. And it does seem to me like the markets are selling a lot of these calls to hedge for some downside. At least that's what I'm doing in the short term, and it does make sense to me. This indicates some bearishness to come in the first week of January, in my opinion. So something to watch for. Max Payne 470, which does give you about a 1% move down expected over the first week of January. Moving over to the charts, before we get into our normal indices, I wanted to show the M2 money stock. This is something that I haven't been watching as closely as I should have been. We've been declining really steadily from April of 22 all the way here to October of 23. And then you can see we broke out here in November, and then we rallied really aggressively. So we had been all the way up around 22 trillion in the M2 stock, got all the way down to 20.6 trillion. So almost $1.5 trillion decline, really substantial in the M2 stock. And then we have rallied $250 billion over the last 2 months. And this is really interesting. So this could be a big driver for the stock market heading higher. Really, you want to see this M2 stock moving higher as markets are moving higher. And it has been confirming that rally here recently. And you can see M2 stock bottomed out here on 23 October, which is right at the bottom of the markets here. This is the S&P 500 in orange, and we've rallied aggressively as the M2 stock continues to go higher. They don't always move in the same direction, though. It is worth noting. You can see we had a pretty significant move down in the M2 stock in March all the way to July, and we did see markets head higher during that period. Eventually, we did pull back pretty substantially as the M2 stock was not supporting that rally. But here recently, we see both of them heading up again in the same direction. And I do think that's a major driver of why this rally has been so strong with such minor pullbacks. Otherwise, moving over to the S&P 500 here on the weekly chart, you can see we did have a slightly bullish week, 0.32%, through another wick to these highs going back to January of 22, which was the all-time high. We can't seem to get above those levels. The actual wick highs were up around that 4,800 area. We have not not officially tested those yet. In terms of trend resistance, I'm watching 48.50, which is technically above those all-time highs. Momentum still bullish. RSI not quite overbought on the weekly chart yet, but we are very, very close at 68.82. Again, as we get into overbought conditions, you can stay there for a long time. And we did see that in April of 21 all the way through here to August of 21, just marching up really, really consistently throughout the year. But I don't think we're in the same conditions that we were seeing during that time period. And you can see the last time we hit overbought conditions was the week of 24 July, and that was the top of markets. And then we saw a pretty substantial drop from those highs all the way down to the lows in October, which was about a 11% decline. So pretty substantial. And if we did see a decline like that, if we hit overbought conditions, that would put us back down to that 4,300 area. Moving over to the SPY on the daily chart, you can see I am currently watching for a head and shoulders pattern. We seem to be about halfway through that setup. And it is interesting. It's also interesting to see bearish momentum here, as well as really, really strong volume on that last day of the week. We saw a slight step up on the Thursday, got the doji, another really strong step up on volume as we pushed lower. So showing some weakness with volume behind it. Bearish momentum on the daily chart. Last time we saw a step down into bearish was all the way on 6 December. That didn't end up being much of anything, and then we rallied through. So it doesn't have to mean anything, but it is worth paying attention to. We also hit this major trend line, touched that level. We're still holding above 474.78. If those areas break, watching for a 470.80, and then below that 467.01, right around that 21 and VWAP level, and that would be slightly below my neckline based on this previous dip low in December. Doesn't have to be this way, could absolutely be a little bit overthrown to the downside if this ends up culminating in a head and shoulders, but just something that I'm watching here. A little bit of weakness to come in first week of January, like I mentioned, basically throughout the indicator so far. Moving over to the NASDAQ on the weekly chart, you can see we dojied 0.29% to the upside, so slight gap up, basically flat on the candle. It is still above the previous all-time highs in November of 21, so we're still holding above that level. Still watching this divergence form here from the highs in July, much lower prices, to current highs, weaker RSI, but much higher prices. So still watching that. Current trend resistance up around 17,400, which does give you a pretty substantial move higher. We're still grinding along this trend line that we're on right now, which does continue to hold. So on the weekly chart, everything still looks bullish, but it'll be interesting to see that first week of January. And then moving over to the daily chart, you can see we did have 2 bear days in a row. So 0.05 and then 0.43 to the downside, still holding 408.81. You could argue that same head and shoulders pattern, left shoulder head, moving back towards that neckline, which is your 403 level, going back to this big down move that we saw on 20 December. And it's also worth mentioning here, we did hit bearish momentum just barely. Last time we saw that is for December, and then we had a couple more ticks lower down to that 21 EMA, which is currently sitting around 426, which would be a substantial move lower down to my 439 level. You also have VWAP sitting at 398.84, which again would be about a 2.5% down move from current prices. You can see exactly what it would be. Yep, right around that 2.5% move to the downside. Then we could find a little bit of support in that area, just like we did here, and then rally higher if it's going to happen. But right now, in the short term, it does look a little bit more bearish than it has over the last couple of weeks. Moving over to the Russell on the weekly chart, we did see a negative week for the first time in a while, going all the way back to the first week of November. So 0.38% down, not massive overall on the week, but if you do go from that top of the wick to the current low, that's a little bit more substantial at about 2.25% down. So did try to stay bullish, couldn't do it. Ended up closing below 201.88, which was my most recent level for the weekly chart. Next level for me, 198.75. You also have trend support in that area. You can see that medium-term trend line in that zone. And then below that, you got the 144 EMA sitting at 195.65. Momentum still bullish, and it did step up pretty significantly even with that bearish candle. Volume continues to step down pretty consistently. If we start to see volume step up as prices moving lower, that would be a little bit more concerning. You can see that here. So you have a big step down, and it does start to continue here, and volume is rising as the price is moving lower, which is not great. Tend to see follow through as that continues to happen. And then similarly here, you get a weak candle, step up on strong momentum, step up, higher volume, another step up on higher volume, as you continue to see that follow through. So we're starting to see that break down a little bit with a big step down on volume on the weekly chart. And then moving over to the daily chart, you can see that big candle that we saw on the Friday session. It did end up closing below the 9 EMA as well. Momentum probably going to step into bearish territory on the Tuesday or Wednesday session, and you can see a step up on volume on that last day of the week, which was the bearish candle. So interesting to see that. You could argue consolidation tried to break out. Now we're seeing that fail back into this previous consolidation at that 198.75 level. And then if those break down, you watch that 21 EMA down at 193.55, which does give you a substantial amount of downside right in that 3.5 range. Moving over to the Dow on the weekly, the Dow does not care at all. It just continues to go higher. It's at all-time highs. Continues to go higher. We have a new high close, 0.82%, closed at 376.87. Momentum very bullish. RSI overbought conditions on the weekly chart. But again, it is worth mentioning we have seen volume taper as prices were going higher here recently. We're not seeing that surge in volume over the past few weeks the same way that we saw from the end of November here to the first 2 weeks of December. Doesn't necessarily mean this is going to turn around. Everything still does look bullish for me on the Dow. And zooming out here just a little bit, you can see we're well above these previous highs in full price discovery. No real levels to work off of, just short-term turning points during this most recent rally. And then looking at it on the daily chart just for a moment, you can see the one level I do have is 376.35. We're still above that level. Did mark that on the high from 20 December. Still holding above it, still above the 9 and 21 EMAs. Everything continues to look pretty bullish except for momentum, which has been bearish for 4 days in a row as we continue to see price go higher. So this is a melt up, which is a little bit tougher to see on the MACD. RSI still in overbought conditions. Everything's still bullish on the Dow. Moving over to the equal weighted S&Ps, we did get another bullish week, slightly 0.5% to the bull side. Momentum still bullish. Volume continues to step down over the last 3 weeks. We're still hovering between 155 and 160. Still haven't hit the critical level though at that 160 range, which was the high from these wicks back to February of 22. And that is my current price target. I do think we'll get there before we change direction. A move similar to this where we throw a big wick, end up getting rejected, consolidate, and then break down. We haven't seen anything like that yet. I do think it's possible, but right now everything is still technically bullish. Let's jump over to the daily chart just for a moment. You could argue that momentum is starting to fade a little bit. Momentum did step to bearish on that Friday session just for a moment for the first time, going all the way back here to 20 October. And once that did happen, we did see a fairly substantial move lower during that time period. Obviously, the conditions are very different. We're still well above the 9 EMA on the daily chart, but one step down into bearish. If we do see this follow through, you could argue we're going to at least see a test of the 21 EMA down at 154.07. Moving over to ratios, SPX divided by the Russell did see a bounce off of that 55 EMA, did overthrow it to my level at 2.3. Momentum still bearish, RSI still bearish, so we're still looking for a Russell outperformance, but it is worth noting we had a very strong move from mid-November to current levels. Russell outperformed massively, and now we're starting to see a little bit of a reversal or slight pullback in that ratio. NASDAQ SPY continues to grind higher just slightly. With that wick high, it did end up negative on the week, 0.03%, but to me this structure is still intact, continues to grind higher. NASDAQ outperforming the SPY, and we might see a little bit of Russell weakness going into that first week of January. Moving over to SPX divided by the M2 money supply, you can see we are at a very high level for this ratio. Got the COVID high, all-time high in terms of price, but on this ratio we have broken above those levels pretty strongly actually. Trend resistance sitting up around 23.30. Again, starting to show a little bit of weakness. Obviously the price action is going to be the same as the SPY. But we already looked at the M2 money supply, which is growing, and then we saw SPX prices also growing. So both of these going higher, and we still see the ratio headed higher, just demonstrating the strength of price of stocks right now. Not quite overbought conditions, still have divergence from that July high, just like we saw on some of the other charts. But price action is king, still got a bullish candle, waiting for this to actually show some weakness, and it hasn't done it quite yet. Moving over to Apple and Tesla, both of these had a bearish week. Apple down 0.55, Tesla down 1.61. Momentum continues to roll towards bearish for Apple. We did wick the all-time highs. Now we're pulling back from that level. 9 EMA sitting at 190.37. Below that, you got the 21 sitting at 182, which does give you quite a bit of downside. Look at that on the daily chart just for a moment. You can see we have the 9 and 21s as well as the VWAP all in the same area. Does look like we're about to see a cross. Bearish momentum, bearish RSI on the daily chart. Does look like weakness is here to come for Apple. And then looking at Tesla, we still see bullish momentum, which is interesting on the weekly chart. We did hit my 264 price target just for a moment and then pulled back really strongly. We'll look at that on the daily chart just for a moment. You can see we rallied up to there, touched it, pulled back really strongly on that Thursday candle, continued lower on the Friday candle, back into this support area around 246.50 or so. Still holding that level, so it could hold. Momentum, bearish, RSI looking to break lower as it trends down, still above the 50 line, so that's worth noting. In terms of structure, we're still above the medium-term EMAs, but short-term we are bearish on Tesla. Moving over to AMD and NVDA, we have AMD outperforming massively, 5.59% to the upside. Bullish momentum, bullish RSI, super overbought, 73.36. We have this kind of expanding rising wedge here, looking at this trending towards that 163 area. That would be right in these all-time highs for AMD, and it does seem like that's where we're headed. AMD continues to outperform massively in the semiconductor space, which continues to be one of the strongest sectors. NVIDIA up 1.42% right at these wick highs, and that actually was a new high close for NVIDIA on the weekly chart at 495.22. The wick was not an all-time high, but for the close, definitely an all-time high. Let's go ahead and open up momentum. You can see still basically neutral, moving towards bullish. If this breaks out here, that's going to be massive for NVIDIA. I continue to see articles of people saying NVIDIA is still undervalued despite its massive multiples, but super strong growth rate. NVIDIA continues to be strong, and AMD driving markets higher. And in my opinion, this is what's holding up the NASDAQ in the short term. Moving over to staples and discretionaries, we did see clear divergence between staples and discretionaries this week. Staples were up 1.14%. Haven't quite gotten to my 72.50 level yet, but that is what I'm looking at for my short-term price target. And then looking at discretionaries, down 0.37%. Momentum still bullish, but I would expect that to step down with some follow through this week. It's currently at that short-term support at 178.36. Once that breaks, I'll be watching 174.76 at these previous highs. And then you have the 9 EMA sitting all the way down at 171, just past my 170.68 level. You can see that highly traded zone in that same area, 171.79. And you can see that same step down on volume. Really on both charts, the volume continues to step down, but you can see an acceleration of momentum on staples. This does look stronger, headed towards that 72.86 area with the 55 and 144 EMAs. I do want to highlight the daily chart here just for a moment. It does have that 200 SMA sitting at that 72.50 level, which is why I'm watching it. Got very close to touching it. We're headed back towards it, and I do think we're going to get there on staples. Moving over to oil and gas and energy on the weekly charts, you can see we did have a bearish week, which is interesting. 1.43 and 1.34 to the downside. Touch VWAP on oil and gas, but momentum continues to tick towards bullish. I want to see that hold at the 55-week moving average at 135.83. And then I have my level 135.07 as a stopping point. You can see all of these wicks in that area. I do expect to hold that level on oil and gas. It has been quite weak. We've moved down from 154 into this area, but we then showed a pretty strong move from this 128 area up to 135. And that's why I'm expecting that to hold here in the short term. Similarly on energy, pretty big move from 90 to 80 down to 80.63. Showed some pretty strong rejection from that area. I want to see 83.55 hold. Got very close to that area. Realistically, I was hoping 84.56 was going to hold, but it didn't do it. We did break below that. Need 83.55 to hold. If that breaks, then you could look for a push back to these previous lows in that 80.63 area. So critical area, but hoping both of these are going to hold in this zone. If they break, definitely use those mental stops and get out of that position and try to reestablish down in this previous low, and then wait to see if this previous low is going to hold. And then if that one doesn't, then you're looking all the way down to this 75, 78 area, going back to the lows here in March and almost touching that same low here in June of this year. Moving over to breadth on the 20 and 50 day, you can see 20 day continues to chop in this same zone, still holds above all of the EMAs while momentum continues to sell off here. 50 day average continues to be in that critical zone Got a doji this week, still technically bullish, 0.23% to the upside, but momentum continues to roll over quite frequently. Once this starts to roll over, it does step down quite quickly back into these more normalized ranges on breadth. We have not seen that yet, and you can see just about every time we get into the zone, very shortly after, we do see some kind of pullback. Hasn't started yet. We still see steps up every single week, but it does seem like it's coming. And then looking at the 200-day average just for a moment, again, slightly bullish on the week, still holding right at that critical level, 76.04, have not gotten above it. We've wicked that level 3 weeks in a row, still have not gotten above those previous wicks. If that area breaks, then you're watching towards these basically all-time highs on this ratio up around 90.50. Anytime we get into that zone, that is just about the top of this market. But it is worth noting that we can get in here and hold for multiple weeks in a row, touch this level here in December of 20, did not break down from this level until July of 21, and then it took much longer for markets to really break down from that level, so a little bit less reliable on this indicator, but still worth watching. Moving over to bonds, moving over to yields, you can see yields sold off on the 2-year, still below, right at my 4.25 level. Momentum bearish, RSI still bearish. 10-year on the other hand, showing a little bit of strength. Let's go ahead and zoom in on that one. Seems a little bit more interesting. It sold off really strongly from that 5% level down to 3 3/4. Haven't quite touched that level yet, but it's starting to turn up. Definitely interesting. RSI breaking above the SMA. Got a step into bullish momentum for the first time in a long time on the Friday session. And I've talked about multiple times, I do think yields have gone a little bit too far to the downside. This is going to spike up a little bit, maybe up into that 4.25 range, but at least above the 4% level, in my opinion. Moving over to the put call ratio on the weekly chart, I did want to highlight we did wick all the way down to that 0.5% area. That is typically where we start to see tops in markets. We did hit that here this week, touch that level just for a moment. We talked about it when it happened on the daily chart, but showing that weekly, you can see we touched that level, rejected very strongly back into the mid-range. This indicator is a little bit tougher to read. You can see you can spend a longer period of time here. And then you had the January of 21 peak before we started to see the put call ratio head back towards that more normalized midpoint. Now we've kind of peaked on the bear side. You can see it here on that October peak, which was right around the lows of the market. And now we've seen a wick to the downside, which typically marks at least close to a top in markets. And then we should start to see this move in the opposite direction. Moving over to the dollar, we've talked about some short-term dollar bullishness. Saw a big move down, rejected very strongly, got back above my 101.25 level. And you can see that just a little bit here on the daily chart. Big move down, rejected most of it, got above that support line. Let's go ahead and take a look at the weekly chart. We were watching that 144 EMA, touched that level, rejected very strongly, ended up holding 101.25 on the weekly candle. Still haven't seen a reversal. So this is still a bearish candle, bearish move. Everything does look kind of weak, but found some support in these previous lows at that 144 EMA. Want to see momentum tick towards bullish if it's going to do it. And that would be a little bit weaker for equities if we did see a little bit of dollar strength. Moving over to JNK and TLT, you can see both of these did move much lower. Gap down, filled the gap, broke below 94.82. Next level is trend at 94.39. And then you got the 21 EMA sitting down at 93.92. VWAP all the way down at 93.68, right at this level. Momentum bearish, RSI bearish. These indicators have been quite weak for a while. We've been talking about it, how this continues to look like a fade. And on the Friday session, we did see a pretty substantial move down, and it did close on the low, which is also not great, and below that 9 EMA. And then looking at TLT, similarly, we got to that 100 level, talked about breaking above it on that Wednesday candle. Gap down, fell, gap down, fell. Does look quite a bit weaker. We're still in that highly traded zone, 98.48 on this shorter time frame. Let's go ahead and look at that on the weekly chart. We're definitely showing some rejection off of that 55 EMA. Highly traded zone for this is all the way up at 101.80. We haven't gotten anywhere near that yet. You also have a level at 102.50. Momentum still bullish. RSI still technically bullish, so could absolutely go higher, but the shorter time frames are showing weakness like we talked about. Moving over to the VIX on the weekly chart, we gapped up, fell right back into that same range that we've been in. Momentum continues to tick back towards bullish a little bit. We're still at that short-term low at 12.33. Looking at it on the daily chart, you can see what we've been looking at. We were showing a little bit of a trend, couldn't do it, broke below it. We're right at this short-term support. Nothing really of note. Still in this previous consolidation. Daily momentum rolling back towards bearish. VIX not giving us a ton of information. It is still technically a higher low, which is interesting. And we did try to have a move on Friday, but it was quickly rejected. So still watching the VIX. Nothing really doing here yet. Moving over to my accounts, I was up about 0.75% or $750 on this week. So not bad. Obviously not a great year. Hoping to turn that around next year. In terms of positions, got my covered call here on the IWM, still sitting down at 189 for $18.27 credit. Still have about $15 left on that as potential profit. So protecting my shares on the IWM for quite a long ways to the downside. I do think that there is some risk. I can roll these up if we start to see bullishness, but that's not what we're seeing right now. You can see that big down move we saw on Friday showing me some weakness. Qs were down about 0.5%, also not great on Friday. I do have my one put. I do have my one set of shares, as well as my two covered calls protecting me to the downside. And then XLE, this was an ad this week, down at 184 for 93 cents. So I'm looking to buy the stock right in that 183.50 area. That's why I talked about it on the charts. I want that area to hold. And if it does not hold, then I'll be looking to get out of that position. So right now, everything bullish in terms of bias, but pretty well protected to the downside as I do see risk there. And then looking at my P&L graph for my NASDAQ position, you can see slight bearish bias, looking at about 4,100 in current outstanding potential profits. And then I don't start to lose money until we see a massive rally up to 429, which I don't think is going to happen. You can see that short-term put position. If we see stocks fall, I'm protected all the way down to 390, and I would take these puts off long before stocks fell anywhere near that level, which would give me even more protection on this position. Let me know down in the comments section what you think about pricing power and what you think of Q4 of 2024 earnings. Is that going to be a turning point? Will it have a large effect on markets, or is it just going to be another earnings season? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.